Mid-caps in the bank nifty are actually have started a tad bit in the green.
Flat in the benchmark indices and the rally continues in the broader market. So power across the board, across capitalized market capitalization is doing well.
Yeah. 19,700.
It's the 7th consecutive day that the mid-cap index has hit a record high. Up 0.5% on the sensex and nifty. The mid-caps are powering with a gain of 3/4 of a percentage point. The nifty bank is higher by nearly 1%. I think that's the big change that banks have performed today.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Sensex and Nifty end at their highest level in a month thanks to a late rally. Rupee continues to weaken against the dollar, ending at record closing low. Tata Consultancy Services bags a £800 million contract from group company and existing client Jaguar Land Rover, making this the third over $1 billion deal win by Indian IT services major this quarter. Larsen & Toubro is likely to have won a mega order worth $3 billion from Saudi Aramco, and another big win may be on the way, sources tell CNBC-TV18. The win could put the company on a path to beat its guidance.
They can continue to take customers away from the banks, and if you're not, we don't react or are not proactive about it.
Axis Bank CEO Amitabh Chaudhary says banks have to be agile and nimble with digitech innovation if they are to keep their competitive edge. Adds that strict fintech regulations will serve as a protective moat only for a short period. That's a CNBC-TV18 exclusive. United Breweries surges over 5% after appointing Vivek Gupta as the new managing director and CEO for a 5-year tenure. Force Motors fires up after registering strong sales in August. Strides Pharma gains as its board approves a restructuring plan, while Concord Biotech slumps in trade. And here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have with us Sandeep Bhatia, Head of Equity and India Country Head at Macquarie Group. In a big corporate voice, we have an exclusive conversation with Amitabh Chaudhary, Managing Director and CEO of Axis Bank. Now, straight to the day's market action. The last hour surge helped the Lal Street end at over 1-month highs. Nifty and Sensex gained over 0.5%. Financials led the recovery with the Nifty Bank Index soaring 1%. Select IT stocks also batted for the bulls. Mid-caps also fared better than the blue chips. Prashant Nair is here with the day's trading action. Prashant.
Well, it was a slow start. At no point did the market, even with negative global cues, look like it was going to sell off or anything in a big way. But then the recovery came and the market kept moving higher through the course of the day. It was one of those days. The Nifty ending above 19,700. It's an important level. The Bank Nifty doing well, and it's also crossed some important resistance levels. Up on your screen, mid-caps and small caps, they took a break yesterday with about a 0.25% kind of cut, flattish close, but today they were back with about 0.75% gain each on those two indices. Gainers coming through in some of the old economy names. Coal India has been a big mover, 7% today, 15% for the week so far. L&T, there was that big talk of order. Stock ended 4% higher, started flat and ended at the high point, 100 rupees up. IndusInd Bank was the other one. And then there were names like SBI Life, Tech Mahindra, HCL Tech, which were other participants on the upside. On broader markets, I just want to start with shipbuilders, which basically are flying away, right? Mazgaon, Garden Reach, Cochin Shipyard, which ended 20% higher. Just incredible. Some of these stocks, of course, are up 100% this year so far. Now, other than that, in terms of broader markets, you had names like IRFC, J&K Bank, Devyani Foods came back into action, IRB, IOL Chemicals, Astra Micro, Asahi India, Camlin Fine, which has been a dud for a long time, that started to participate this week. Varroc, GM Breweries, Donier, Himmat Singh Seed, and many others. But this is the bulk of the volume-led activity which we had. Some losers, fertilizer stocks like GSFC pullback, APL Apollo saw some cut. InSwift question marks around the deal they've done. We pointed that out yesterday. Stock sharply lower. Rate gain is back below 600, and something like a HPL Electric also saw some profit booking. Nifty is above 19,700. Global cues are adversarial. Oil is above 90. And you got US yields, the 2-year above 5%. Can we, above 19,700, aim sights for the all-time high, 19,992? That's the question which I think people will be wondering as we come back to trade tomorrow morning and Friday. Back to you.
Okay, all right. Thank you so much for joining us, Prashant, for that analysis. In fact, rupee continued to weaken against the dollar, ending at record closing low. The RBI has promised to review tomorrow its decision to impose incremental cash reserve ratio of 10% on deposits garnered by banks between May 19 and July 28. Lata Venkatesh is here with the details. Lata.
Well, banks and bond markets are in a state of suspended animation, don't want to move this way or that because it's a big decision. No one knows. So I did a poll, and the poll says 50% are expecting the ICRR to be tweaked to 5% or thereabouts. The other is split. There are 20% or a minority which expects it to be completely removed, and another 30% which believes that it will be completely retained. Now, you know, when RBI was imposing this 10% CRR, it said that there has been excess liquidity in the system because of the 2,000 rupee notes being returned, and therefore this timing. May 19th was when they announced the withdrawal of the 2,000 rupee notes, and July 28th, that is the period in which most of the money was returned. But in reality, RBI's reason was that inflation is going to be very high for a couple of months, and they don't want to pour paraffin over this fire by putting more liquidity, and that's why the liquidity tightening. That's why the doubt in people's minds, you know, that inflation is going to be high probably even in September. So will RBI drain out? It drained out 1.1 trillion, approximately 1.1 lakh crore rupees from the system. Now, at the moment, the liquidity went into deficit, and the weekly, the daily call rate moved up towards 675 from 650. But now, again, liquidity has returned with the government spending over the month end, and therefore now there's a surplus liquidity of about 80,000 crores to 1.5 lakh crore, depending on which day you are looking at liquidity. So there is a problem in the people's mind. Oh, will they continue with the tightening? Now, the tightening of liquidity will anyway happen on September 15th because of advance tax payments. All that goes out of the banking system. So there is the other group which feels, why do it? You know, let us do, maybe they should do some short-term measures. Okay, now, here's my take. I'm being, arrogant enough to give an editor's take on this. My sense is that they are going to remove the ICRR. Simply because it's, it was designed only for that temporary liquidity, and henceforth they may play it by the year and do a VRRR, variable rate reverse repo, when there is excess liquidity. That will be to absorb. And when there is deficit liquidity, like it will be mid-September because of tax payments, they will do a variable rate repo. That is, banks can borrow from them at a variable rate. It is likely they will do that. And the end of the ICRR could also be because anyway the dollar is strengthening. So the rupee is weakening, and that will mean RBI is probably selling dollars. That also absorbs liquidity. So they have a couple of, elbow room to tackle liquidity, which is why they may end the ICRR. And then the big question is whether they will announce it before trading hours on Friday or after. My best guess, according to sources, who usually are correct, is that they will announce it before trading hours. That's Friday morning.
Okay, Lata, this is an important update. We'll keep watching for your analysis on this one as well. Moving on to the market opinion now, Sandeep Bhatia of the Macquarie Group is betting on the banking space but is cautious on the large cap IT names. Also lays out his other top bets. Listen in.
Right now, if you look at some of the large sectors, like banks have probably given their best performance in terms of numbers. The stock prices may still continue to move, which they should, because we are not in any down cycle. We are probably, not even at the peak of the best part of the cycle. We are mid-cycle for banks. And to that extent, one can continue to remain invested. The real beaten down pack, which people should look at, is the IT sector. And here there are good quality names which clearly have not performed and not been investors' favorites. So I think it's time to actually look at some of these underperforming sectors and names. The entire manufacturing sector, construction sector, which requires steel, all these are in it. Even the services sector, in fact, artificial intelligence and everything also requires power. So I think the old-fashioned power is definitely there for the next 10 years, if not 20 years. So I think for the next 10 years, for a country like India, we have no option but to rely on thermal power, and to that extent, that sector definitely will see volume growth and expansion.
Okay, all right. That is an expert opinion coming in. Moving on to the second headline now. Tata Consultancy Services has bagged a $1 billion deal from Jaguar Land Rover. This in a bid to ramp up its digital infrastructure over the next 5 years. TCS will provide the auto major a slew of services, including app development, cloud migration, and cybersecurity. The IT space has been in focus lately due to large deal wins this fiscal. Reema Tendulkar is here with more on that. Reema.
Thanks so much for that. You know, there is macro uncertainty, there is a global downturn, but yet the IT companies, the stock price has been resilient and large deal flows have been trickling in for the large cap IT names. This is what's different this time versus the previous downtrends for the IT companies. That IT companies are winning large deals despite this slowdown. Their order book is solid. Just today, TCS announced a large deal with JLR, which is valued at $1 billion, spread over 5 years. But in the last month, in the month of August, we had HCLTech signing a $2.1 billion Verizon deal and Infosys sign a mega deal with the Liberty Group. It's valued at €1.5 billion for a period of 5 years, but there was an option to extend it for a period of 8 years with an estimated value of €2.3 billion. So basically, these are mega deals. Not just that, even the stable US economy has been a driver of the IT stocks outperforming despite very poor numbers in Q4 of FY23 and Q1 of FY24. In fact, most IT stocks have declined post their Q1 numbers, but since then, the stocks have recouped all their losses and now are trading well above the levels that they were prior to the weakness setting in. Year to date, IT stocks have done very well with names like HCLTech, LTI Mindtree, Tech Mahindra, all a part of the Nifty, having seen a growth of close to about 20%. So that's about the stock price. And it's not that deal wins have picked up only in the last 1 month or so, in September and August. For the last 2 quarters, which is where the slowdown has been most pronounced, the company's order book, the deal wins, the pipeline has been very, very solid. Just for reference, we've taken for TCS and for Infosys. Now, both for TCS and Infosys, the deal wins in Q1 were higher compared to what they were in Q1 of last year. Now, the only risk to watch out in all this, in these large mega deals, is will these deals be margin dilutive? Because typically, when you have these large deals, and these are all cost takeout deals, where the company, the client is trying to bring down their costs, optimize their costs, that they typically have low margins for the IT companies in the initial period due to transition. So currently, the street is penciling in a pickup in FY25 margins. But if these large deals are margin dilutive, then is there a risk to the FY25 margin assumptions? We told you about the stock price gains and how the IT stocks have outperformed. Let me also leave you with the valuation plate for the large cap IT companies.
Okay, all right. Thank you so much for that, Reema. Moving on to the third headline now. Shares of Larsen & Toubro surged 4% following news that the engineering major is close to bagging a $3 billion deal from Saudi Aramco. Meanwhile, a CLSA note says that L&T is one of the few preferred contractors for Aramco. Vivek Iyer is here with more details. Vivek.
Well, absolutely right. You know, every time we talk about L&T, the size of the order win is something that does matter for a company of the size of L&T and having an order book in excess of 4 lakh crore. You know, an order win in the range of 5 to 10,000 crore is, routine business. But this particular order win is quite significant and quite material. What we understand is that the company is the preferred contractor for getting Saudi Aramco's Jafurah unconventional gas development project. Like you mentioned, this particular project would be worth, or this particular contract would be worth close to $3 billion. That is almost 25,000 crore, between 24 to 25,000 crore. Now, what will actually L&T do for this particular contract? L&T will develop the gas processing plant and the main process units for the project. Now, very interestingly, Saudi Aramco also recently invited bids for close to $10 billion for Safaniya gas field, and these bids were recently submitted. While it still remains to be seen, what exactly and where exactly is L&T the lowest bidder and the preferred bidder. This is also another order that is important to keep track for. Now, apart from that, we did reach out to L&T. They have not yet responded to our queries. To give some context, at the end of FY23, L&T had an order book in excess of 4 lakh crore, and they gave an order inflow guidance, on a base of 1.8 lakh crore of 10 to 12% upside. So with this particular order win and some few other order wins that are in the pipeline, there is a good chance that L&T at this point of time would be able to go ahead and exceed the order inflow guidance that they're given. Also remember, Q3 and Q4 could be slightly lower. Management has flagged off that given it's a pre-election year, the domestic ordering activity could be slightly subdued then.
Okay, all right. Thank you so much for joining us, Vivek. Time for a break now, but stay tuned. We'll be back in a jiffy with all the other headlines that we are tracking. Welcome back. You're still tuned into Markets Today. Let's go to the rest of the headlines that we are tracking for you. The fourth headline now, onto a CNBC-TV18 exclusive. Axis Bank CEO Amitabh Chaudhary has warned that fintech companies can lure customers away from banks. Speaking to my colleague Ritu Singh on the sidelines of the Global Fintech Fest, he added that strict fintech regulations will serve as a protective moat only for a short period. Here's a slice of that conversation.
When you talk about the regulations can act as a moat only for a short period of time. End of the day, if fintechs come with the right innovation, the right product, the right customer journey, I think they can continue to take customers away from the banks. And if you're not, we don't react or are not proactive about it. So in my mind, a couple of changes have happened post some of the regulations that have come in. I think the fintechs have had to rethink their model a little bit. I think they have realized that regulation is not a bug, but is actually a feature which they want to have in their operating model, and a very critical feature. So they have to put compliance with regulations fair and center of how they go about building their business models. And I think that realization has dawned very quickly, and a lot of fintechs are repivoting their model. But there are large fintechs out there who are providing services to customers, who are interacting on their platforms on a very large scale. So from a bank's perspective, the reaction to whatever is happening is, I would say, twofold. One is you first continue to innovate yourself and ensure that you continue to attract customers directly. And second is that you work in partnership with all these fintechs, because they are attracting a customers of a certain kind who are using a certain service. In many cases, a bank can come in and supplement and complement what those platforms are doing. And that's precisely what, say, a bank like us is attempting to do. We have huge number of partnerships, some very, very marquee partnerships. And I think we're only building them over a period of time.
Let's broaden the pool a little bit, because, public sector banks that have been saddled with bad loans are coming back stronger with cleaner balance sheets. You have larger private entities being created, your former HDFC Bank merger. You have Jio coming onto the scene. Aside from fintechs, who's the biggest competition for Axis Bank at the moment?
See, all our competition, and the competition is evolving as you rightly pointed out, that public sector banks are coming back, fintechs are becoming more important and prominent, Jio Financial Services are talking about making a big play in the market. The good news is that Indian opportunity is very large. It is only growing. The fact that all of us are here and so many people are here, they see India as a place where a lot of innovation, a lot of growth can happen in a short period of time. And I think it's a question of how you play on that opportunity, rather than all the time worrying about, I have a certain scale and how do I protect myself. I think you should be thinking about how can you grow in this platform which is going to get created for India in a very, very big way in the years to come. So yes, competition is welcome. Competition will always be there. It will always, new competition will keep coming. It's a question of how we react to it. I mean, at least in case of Axis Bank, we are seeing this as an opportunity, and that's exactly how we're going about it.
Okay, that is a big CNBC-TV18 exclusive. But with that, we'll move on to the fifth headline now. United Breweries has named Vivek Gupta as the new managing director and CEO for a term of 5 years. The announcement sent the stock soaring by 5% in trade today. Manglam Malu is here with the details. Manglam.
Well, nothing excites a consumer stock more than the announcement of a new leader. Is something that we've learned over the last couple of years. And importantly, if it's a company which has strong brands and has been underperforming and has been leaderless, then the appointment acts as a bit of a positive catalyst as well. And that's exactly what has happened with United Breweries as well, where they've announced Vivek Gupta as the MD and CEO for the next 5 years. Remember, the earlier MD and CEO, Rishi Pardal, had resigned in February 2023 itself, and since then the stock has been underperforming. I mean, just to put things into perspective, despite today's move of 5%, the stock is actually down 2% from the start of this year, which is a vast underperformance. If you take a look at the other alcohol stock in the same space, we have United Spirits, which is up 20% this year, and the mid-cap index itself is up 30%. So it has been an underperforming stock, leaderless, and now a new leadership has come about. Where does Vivek join United Breweries from? Well, he's joining the company from Udaan, where he was the chief business officer earlier. And prior to that, he's been working at P&G itself for more than 20 years, 22 years to be precise. And he's also taken up leadership positions at international arms of Procter & Gamble as well, where he was the MD of P&G Australia and New Zealand. He's 47, so obviously has a long growth runway ahead of him, and an MBA from IIM Ahmedabad. So person joins in from Udaan and the stock literally takes off. That's about United Breweries.
Okay, all right. Thank you so much, Manglam, for making sense of the stock move that we saw on United Breweries. Life insurance stocks, they were in focus today on the back of business numbers for the month of August. Abhishek Kothari is joining us with the details.
Well, August, the monthly life insurance data has come out and it was a mixed bag. So SDFC Life, the new business premium growth is around 25% YOY. Retail APE, that is annualized premium equivalent growth, was about 16% YOY. For ICICI Pru, the top line was weak as new business premium declined by 5.5% YOY. Retail APE, that is annualized premium equivalent, was up about 12.3% YOY. For Max Life, the growth was really robust. The top line growth or the new business premium growth was around 35.5% YOY, and retail APE growth was about 48.5% YOY. SBI Life momentum was good over there. New business premium growth was 15.7% YOY, and the retail APE growth was about 34% YOY. A weak set of numbers came in for LIC. The new business premium is down about 34.7% YOY, and the retail APE growth was the lowest amongst all the life insurance listed players, about just 3% on a YOY basis. Back to you.
Thank you, Abhishek, for joining us. Force Motors rallied 5% after it registered strong sales in August. In fact, the stock has seen a stellar rally this year. Sonia Shana is here with the details. Sonia.
Well, thanks a lot for that. Force Motors is definitely one of the big buzzers in trade, not just today, but through the course of FY23. In fact, in this calendar year alone, the stock is up 161% on the back of an improvement in sales. Now, Force Motors has seen a good month-on-month jump in the sales in the month of August. In fact, the total sales went up 17.5% month-on-month, coming in at 3,276 units. And if you look at the average sales that they've done, in the preceding 5 months, the average sales were about 2,500 units. And compared to that, the sales this month have bumped up to about 3,276 units. Now, Q1 results were also a top-down beat for Force Motors. And since then, the stock has been rising. Very strong revenue and EBITDA growth as commercial vehicles have come back in a big way. Buses, the demand for buses has come back in a big way in which Force Motors is present, especially school buses and buses that are used as commercial vehicles. It was an EBITDA growth and a turnaround quarter for the company this time. The EBITDA quadrupled on a year-on-year basis, while the company reported a profit of almost 70 crores versus a loss of 17 crores same time last year. So good improvement in earnings and a pickup in the sales in the month of August is what led to a big bump up in the stock.
Okay, Sonia, thank you so much for joining us. Well, global private equity firm Warburg Pincus remains bullish on India. Vishal Mahadevia of the company says equity market in India is strong. Listen in to what he had to say.
Firstly, markets are strong. Liquidity in the markets, both from domestic and foreign investors, remains really strong. And these new investors are looking for A-plus assets with really strong corporate governance. So funds like us that have helped create these assets, these institutions that are now strong listed entities, will naturally find windows like this for block trades that usher in the new investors. And I think, look, as a fund with a life, while we have no immediate plans to do anything, it will be natural for companies that we're in, companies that other private equity funds are in, to use these windows, and you'll see more and more block trades, is my opinion.
Okay, all right, that is some opinion on Indian markets. From that, let's move on to Pharma now. Concord Biotech fell after a weak performance, while Strides Pharma rallied after its board approved the acquisition of Strides Pharma Services. Ekta Batra is here with all the action.
Well, thanks for that. I'll start with Concord Biotech, the recent listing. It is a Rakesh Jhunjhunwala-backed company as well. 89% of sales from the API space, 11% from formulations, 23 fermentation-based APIs, which means that they are much more difficult to manufacture APIs or active pharma ingredients. 44.3% of sales come from the top 10 customers. They have reported the first full quarter post-listing. Revenue was up around 8% year-on-year, EBITDA up around close to 12% year-on-year. Margins have been maintained. In fact, 100 basis points improvement on a year-on-year basis to 37% versus 36%, and a profit of which has grown around 11% Q on Q, the numbers were sluggish, but year-on-year is what the numbers need to be. tracked as. Separately, I'm also watching Strides in today's trading session. That stock has seen a good amount of traction in terms of volumes as well as price. The board has approved the acquisition of Strides Pharma Services Private Limited. It's a very small transaction which is taking place. SPSL is a wholly owned subsidiary of Arco Lab, which is a wholly owned subsidiary of the company. So with this, SPSPL will now be a directly wholly owned subsidiary of Strides. That's a small piece, but the street is probably going to wait for more details about the restructuring that they had announced post Q1 of FY24, where they had indicated that the company is looking to combine their CDMO interests of the group. That means that the company is looking to consolidate the promoter-run injectable CDMO business under Strides into one platform. The company is aiming to make a platform which is specialty-focused pharma CDMO business. That means that Stelis, which is their biopharma arm, will comprise of these CDMO businesses such as biologics, complex injectables, oral technologies. They had indicated that they would intimate the exchanges within 12 weeks about the scheme of arrangement and also do due diligence. So maybe the street is waiting by for those details as well.
Okay, all right. Thank you so much, Ekta, for joining us. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.